All right, welcome. Let me just make sure that I'm recording using the microphone. Okay, welcome and good day to everyone from all over the world. Thank you for attending my webinar. Today is the Wednesday's midweek webinar by Bretton Financial Academy. So my name is Kenny Simon, and we are conducting these webinars every week on Mondays, Wednesdays, and Fridays. So today, Wednesday, is the midweek webinar where we actually will go through our current trade positions, signals, trade ideas, and signals that has been shared. Also, what's been going on the past 24 hours, whether or not we have got new opportunities, new risk events that's been going on. Also, to help you troubleshoot your trades and your trade ideas and signals that you are thinking of or already trading, and we can get onto it. So that's basically what this webinar is all about on Wednesdays, especially. It's the midweek webinar by Bretton Academy. Okay, so let's get going. Just before we go on to the charts, we have triggered quite a number of trade ideas and trade signals as well. Some has hit take profits. Some has been actually performing quite well. Some we are actually still awaiting. So perhaps today, tomorrow, when the market is actually having more average movement per pip as well, especially for those pairs that are with the JPY. Usually, if we get signals or we sort of trigger the trade on a Monday, on a Tuesday or so, we usually see these trades sort of, stretch out a little bit for the TP to be hit on maybe on Thursday, most likely, like tomorrow, mainly because with certain pairs, especially the ones that are combined with JPY, they seem to actually hit their TPs on Thursdays, most mainly because their average movement per pip sort of double up. Mainly with the JPY ones, especially like Euro JPY, we've got a more average movement per pip, so it's more volatile on Thursdays. So then we can actually see it happening much more. That's why I want to also look at the fundamental side of it, whether or not we have got economic data that may actually fuel the movement of these pairs much more, so that it sort of push and boost the movement to hit our TPs much faster. Okay, so that is basically it. We've got quite a number of trades that has actually been released as of Monday. So most of these signals that are released by Bretton, by myself, will be published and posted in the members area of BKFX. So they are all stored there. So for members of Bretton, they have the automatic sort of access to the education side of it, and that does actually include my course on geometric trading course inside the Bretton Institute membership as well. But right now, we only have the signals available in there that are a couple of signals per day, and I release them at my time from 10 o'clock a.m. onwards. So then right after this webinar, we will have trade signals being released as well. So we want to take a look at these signals that has been released as well, so that you get a better idea on how to manage these signals and whether or not we are going to be adjusting its entries, exits, or should we actually exit the ones that has not been triggered. So all these discussion could actually happen today on the signals that I have released as well. So that can happen at any other day as well on the webinar day, whether it's Monday, Wednesday, or Fridays, to go over the signals that has been released as well. Okay, so just before we get back into this chart area, I just want to also just go through what are the highlights that are focused on in terms of the news, in terms of the fundamental side of it. So they're still talking about gold as of today. As you can see on Daily FX website right here, you can actually see that even on other websites as well, FX Street not too much, but investing.com, for example, Market Watch, CNBC Business, they are all sort of tally with certain headlines focusing on certain instruments as well. So this is very interesting. So today they're still talking about gold and USD, greenback and all that, mainly because we have the FOMC and all that kind of thing. So gold prices, it says here, climb ahead of FOMC as traders anticipate status quo USD falls. So we want to focus on that as well, on the trend for USD, and we want to look at the yield of the bond yield as well, just to know whether or not it is proper timing for us to also get into buying gold. So one of the simplest thing to do is actually just to type into Google, let's say bond yield, okay? All right. Now, if bond yield falls, then we are looking at the potential of gold prices going up, mainly because it's an inverse relationship between bond yields, right? So here, for example, about 8 hours ago, the summer plunge of bond yields has investors asking how long and how low. So that basically means that the bond yields are falling. So bond prices are up, bond yield or the returns are low and going lower. So that basically should be pushing the price of gold to the upside. So if I type in gold forecast here, and then I go to the news section, and then you can see gold battle with 1,800 extends, levels to watch ahead of Fed. So there is a potential, but there is also a level to watch out for on the technical side of it, 1,800, the price 1,800. So there is a bit of a give and take here, and it does actually also here on Yahoo Finance, it says gold price forecast, gold markets give up early gain. So that is also a little bit of corrections there. Basically, they're take profiting early. Why? We will find that out as well onto the charts. 7 hours ago, FX Street, it says stays defensive again around 1,800, focus on Fed. So I guess they are waiting for the FOMC, but then the price to focus on is also at 1,800. So then we can draw and we, lines and then look at our type of analysis later on onto the chart, but not forgetting the level of 1,800. Okay, so now let's take a look a little bit here as well. News wise, crude oil prices risk forming a lower high. So lower high meaning that they are anticipating what do you call that, rise of oil prices, not falling of oil prices, mainly because of stockpiles fall. So if the stockpile, mainly the supply, the supply of it is falling, and then the demand is increasing, that is going to push price of oil to the upside, not downside. So then we want to go on to the chart later on as well to look at both UK oil, US and UK oil. So here, as what we can actually see, we'll go into it deeper later on. We can see that based on that news headline, it is as well coincidentally just beginning to push up and entering just at the border. The price of US oil right now is bordering the 71.80 psychological level. So if it does go above let's say 71.90 onwards, that means that it would actually gone into the buy zone, and we can then start buying the oil, and then the target would actually be at the end of the buy zone here at 80 area, 80.00, which basically means you need to exit at 79.90. Whatever happens, you start buying at 71.90. You need to exit no matter what below the 80.00 area. Basically, not to go out, not to let the price go out and then you haven't take profit here. So this is your only buy zone. So once it goes in there and reaches 71.90, or better still 72.10 onwards, then you can just buy at any moment of time. Okay, once it reaches that side of it, because it's a bit safer there. It will have a little bit of correction and all that, but it is in a buy zone with the US oil. So that's a good thing. So that is for oil. And then we want to go back just a little bit. Give me a second. So that's on crude oil. Now here, on Euro USD and USD CAD, it says here reversals more suitable to conditions, but beholden to Fed. So every focus at the moment on instruments is on the FOMC announcements, on FOMC decisions, forums, everything else that revolves around interest rate, and decisions on interest rate, decisions also on the impact on the yield, the treasury, all that kind of stuff. So that is going to be moving the markets as well. And I would presume it's going to do the same for commodities like gold as well. Okay, so okay, that is basically it on that side of it. USD JPY drops on heaven flows as traders brace for FOMC. So the safe haven interest into the JPY keeps on building on, which is a good thing because we have released lots of signals on selling JPY crosses, which basically means selling the other currency and buying JPY, and JPY's flow for the safe haven is getting more and more. So let's take a look at that reflection as well with top movers. Let's see what's going on with the top movers. I'm putting it onto the daily chart right here, but I'm looking at the 4 dots. 4 dots, we have got CAD JPY to the upside right now, and it looks like people are on the upside, whether or not it's really happening. That is one of the signals that's been released as well by myself ample of times, but it has hit the how you call that, the take profit for the first sell area right there. For the second sell, I'm on a floating as well myself. It's a good sign that it's actually going up early right now. Maybe it wants to actually sell at a higher price. So I would presume it will go back up to the 87.50 area just a little bit and then find resistance there again and then drop more aggressively. So what I would like it to do and presume that it can actually do is for it to actually come down aggressively like this area right here, like this area right here. So once it goes down aggressively, then it would actually be having a lot more potential to hit my TP here at 86.60. So I myself has actually entered, as you can see the trade right here. I am at the moment on this live account right here on a 400 plus basically floating at this moment of time on CAD JPY, and that is basically because I've traded 2 lots on it. I'm prepared to trade in 2 lots on there. Then it went and bounced upwards. I'm not really bothered about the upwards. I also have my stop loss and everything else sorted, but I have not inserted my stop loss as yet. I've got my you can set up your stop loss in terms of timing as well. So I would set it up in terms of timing, or the reason why I don't put my stop loss now is because I'm ready to actually cut the loss early and straight away as well, so I don't leave it. So I've got a budget of about 800. So now it is halfway through my floating 400 plus. So once it reaches almost 800, maybe about 600 plus 700, and I see it continuing, I'll close it. And I know that I have already planned to lose that 600 on this trade. So that is basically how I do it. But I also have an alert on my mobile to tell me that it goes at a certain level and I want to close it straight away. So that is basically it. But at this moment of time, it's got this potential to go up at this moment of time. So for those who want to sort of ride along the trend, make sure if you are buying or thinking of buying right now, yes, you have some opportunity right there before it goes to the 87.50 area. So what that means is that if you are buying right now or already buying, make sure you exit at 87.40. That is 10 pips under the 87.50 psychological number. So you can exit there, and then we'll see whether or not it proceeds to come down. The good news though is that the whole pattern, the inverse cup and handle pattern for CAD JPY seem to be going quite well. So the handle of the pattern here has already been formed. So that hence the reason I am looking at trading bigger and bigger and then stick to my guns onto the selling of CAD JPY, mainly because I expect for it to come down towards the mouth of the cup area area right here. So I wouldn't actually do any more selling until I will do this one selling right now, but I won't do any more selling, even though it start dropping. If it does start dropping as well, I wouldn't be entering any more of my selling trades, because I would like to trade bigger and more aggressively with bigger lots as well after it has actually gone under the mouth of the cup right here. Okay, so the funny thing as well is that, you know, looking at the cup and handle pattern, this has actually been, you know, has been forming for weeks and weeks and even months, and then it is just following through the pattern at this moment of time. And what is interesting is that as it forms the low, going low and lower, then we are getting more and more negative news of CAD, but then more strength of JPY. All of a sudden, the JPY strength comes in more and more and more. And then we have got more variant, what do you call that, Delta variant thing. And then that's why JPY and also the US dollar at some point will function as safe haven as well. So then we, you know, we can see that as you know, as it goes up like that, you know, it has a limit as well from how much more it can actually go up. And then once it actually starts falling again, then we can see that there's always a reason for it to actually fall as well, following the pattern. And this is very interesting. And I've seen this many times over, whereby we can spot the pattern first and then look at the news following the pattern, which is not the other way around, which is very interesting. But then it can actually follow, the news can actually follow the pattern and then fuel the pattern, or not fuel the pattern completely and then fail the pattern as well. So it works like that. You know, it has its own mind in working hand in hand between the technical patterns and whatever that has been released in the news. So that is why it is really important for us to combine both, to combine technical and fundamental. And especially on the technical side, it's got to do with pattern as a whole. So like here on CAD JPY, this has motivated my sell is the formation of pattern, and every day, every trading day, the pattern is getting more and more solid, you see. So that is basically it. Now, within the pattern as well, for those who have asked me about the how you call that, the geometric patterns, yes, you can trade geometric patterns as well as a confirmation tool. So the ABCD geometric ABCD pattern, for example, is your confirmation tool, and it's supposed to be used as a sort of like the dessert side of the menu. Okay, so here, for example, we had the first pattern right here, right? And that was what motivated me to also trade to the downside according to patterns, as well as what I have seen it moving with bearish candles, you know, bearish mother candles as well. So that was the first sort of motivation right here, where we have a very nice geometric pattern right here on the right side of the cup. Okay, for CAD JPY. So then, you know, the start of the sell was also at the centroid area under the 89.16 and below. So under the 89.00 psychological number, I've also started to actually sell quite a lot of the CAD JPY based on that. But when we were trading, when I was trading as well, or sharing ideas at the time there, it was not very clear the formation of the cup on the other side, but now it got really clear because it already reached this area right here. So this one was traded a long time ago, following it in lower time frame as well, and all that movement has actually built that whole CAD JPY right to the cup area. But then the best part of it all is that it started to form the handle of the cup as well, and it's forming the handle of the cup very nicely. So it does actually look like, if at all something were to trigger the price of CAD to go up, let's say to go up, and that's the sort of alternative scenario, right? Oh, give me a second. Alternative scenario that something has to push it to go up, then it could still go up. Let's say worst case scenario, it went and break this resistant area. It still has room to actually go up maximum to the 50% area at 88.28. So I wouldn't actually worry about it, about the CAD JPY going up too far. But the worst case scenario, if it does go up, it could still go up for some big reason to go and get stuck at the 88.28 area. But I still see a fall for it to happen from there. And the higher it goes to that level, let's say, the bigger the fall impact is going to be. It's going to be more and more aggressive. So hence the reason we see this candle as well, because of the aggressiveness of it going up. So if it does have another aggressiveness to go up, if it gets stuck right here, I think the mother candle bearish one will come down even more aggressively. If it goes up to the area that I've mentioned earlier on, then it will be even more aggressive to the downside. So also with what I can see here, we've got another pattern right here. Give me a second, got my alarm going on. Okay, so here we can see that this is another ABCD type pattern right here, sort of giving you clarity that it is still, you know, has got potential bearishness right here. So I will change the color of this one here, just to differentiate between one ABCD pattern and the other ABCD pattern. So this one goes all the way down there. So this one goes beyond that area. So here we got this one right there. Okay. And this purple ABCD pattern will give you a new centroid area to expect from as well, which is a good thing. So then if I take this one all the way down there, we have got the projected D point, which is here. Okay. And also the projected entry area, let's say, which is a good thing because the projected or suggested area using centroid is exactly, it's quite close to the 80 area. Wait a second. Okay. Has got good support area as well. It was at 86.65. So then lower, you know, you've got lower chances to take to re-enter your trade again following this ABCD pattern. I'll just color this as well. Give me a second. Okay, so we've got that room, a lot of room right there, of course, following the pattern as well. Okay, that looks quite good actually with that. But of course now, yes, it's in correction. It's causing me to have some floating as well. But I know roughly where it could actually be going up to and how much you know, floating and loss that I'm willing to take before I actually closed manually my trades as well. So yeah, that's basically all planned, but I'm sticking to my guns for this one here on CAD JPY on the sell side of it, with some very small buying opportunity at this moment of time. So as I've mentioned, whatever you do, if you're buying CAD JPY right now, riding on the anti-trend side of it, or the correction, make sure you exit at 87.40. Okay, 87.40. Okay, so that is CAD JPY. We want to also go through Gbp USD because that's one of it that we have released the signals right there. And basically we are quite far off, yes, on the 3810 sell and then 3790. But the good thing about it is that I see that traders are beginning to weaken at the very top. And this does actually provide me with a hint that it wants to create a sort of a double top as well. And then I've got all these wicks right here being mirrored by this area right here. It is getting weaker, a lot of wick to the upside as well. It is signaling, you know, lower and lower prices going downwards. It's also been reflected by 1, 2, 3 bearish mother candle as well. This is only on the 4-hour chart that we're looking at for GBP USD. So as far as I can see, the lower it gets, the more aggressive the fall could potentially be. And if it does actually come down lower, let's say now it's trading at 38.76, so it's only about a couple of pips under the 80 psychological number. As it gets lower, and once it reaches the opening price of this mother candle area right here, which is at 38.59, 38.60, then it will show that it wants to go down even more. As it gets lower than 38.50 psychological number, it will be much better. So here, for example, we have got this area right here, very strong mother candle, very strong bearish mother candle as well. As we just go there, you can actually see that you have got that very big area being supported. So this whole zone area here, starting from this area, okay, which is 38.60s area, right? So from here onwards, I think the free fall is going to be very aggressive, and that is exactly at 38.57 or 38.58 area. So what I would do is that the trigger price for sell entry for GBP USD, I mean further entry or more opportunity to re-enter and sell aggressively, should actually start at 38.40 and lower. So 38.40 onwards, I see a very big potential of it actually just falling. So at this stage, we don't know yet what the fundamental reasons could actually be, because it's still very early for a lot of data as well, right? So this is where I would like to look at how the technical side of it will actually encourage some news, and those news that comes out later on in support to whatever we see technically will actually act as a fuel as well to fuel the market more. So this is where I can see that from 38.40 onwards, I think there is a great opportunity for more selling to take place. But right now we are a little bit too early. We are still up here. As it comes down lower and lower and go lower than 38.50, now it's at 38.70s plus. It's already proving that the bears are coming in because it's under the 38.80 psychological number already. So it is giving good signs that it has quite a lot of power to actually come down. This is also a V-like pattern, and it's got this area here in parallel with all this area right here. It's giving us a very big hint that as it goes lower, the fall will be very aggressive, and a lot of mother candles beside it on the left as well. If we go on to the weekly chart, just to see at the big picture area as well, or even the monthly, you can see that it's governed by this very huge area of mother candle, or the body of the mother candle, that we've discussed this already a couple of times as well for GBP USD, and it's actually 1,100 plus pips that's worth in that one body of the mother candle. And then we have got so many other mother candles that are actually supporting that zone, that area as well, as of now where the current price is. So I can only see more potential to actually sell the GBP USD, but still we've got to monitor corrections, and the corrections are quite limited as well. So I'm not really very worried about any sudden jump of price. It's not a change of trend for me. Also, it's been trapped a lot by a lot of very strong resistant area, and you can see as well in different time frame the current price is trapped as well at the EMA lines there, as you can see. Okay, so creating stronger resistant areas. Okay, so that's for GBP USD. CAD JPY, as you guys are quite clear now what to do. On AUD USD, I've released yesterday additional prices to actually sell, and I've got sell entry 1, sell entry 2, and then we have got potential TP there at 72.90. Of course, yes, it was really far yesterday. I mean, further yesterday, but now further from the entry, but then now it got lower as well. As you guys can see, it is trading at 73.58. The same thing, it's trading at the 50 psychological level. And once it goes lower and lower, it goes lower than 73.50, then it gives you more hint that the sellers are coming in. I was not worried about the prices. It was going up, and it was actually worrying quite a number of traders with the very aggressive movement to the upside with mother candles upwards and all that. Yes, it is worrying, but then because of these two boxes right here that I have highlighted, it's a really very, very strong resistance area right here. And then as you can see, if you see all these candles here, who are the dominant player? It was, and it has been the sellers. As you can see, more selling candles, more aggressive selling candles. So if you count all these candles starting from here, all these candles here, you count and you look at the number of bearish candle versus the number of bullish candles as well. This is how you can also manually find out who is in control of the market. Okay, so it's very clearly clear that it is actually the sellers at the moment, and also they are actually getting lower and lower. I mean, the price is getting lower and lower, being pulled down. So what I would like to see, of course, it has triggered a couple of times, triggered very little, and it has frustrated a lot of traders as well. But it shouldn't frustrate you when you have loads of reasons, and it's very clear at the moment, fundamentally and technically. Fundamentally, in Australia, it is going through a lot more mess at this moment of time. Manufacturing closed down, a lot of stuff because of the lockdown, now the financial sector as well. So it's not going to go away that easily and then get repaired on the lockdown and everything else just very fast. So it will take time. So that is actually fueling the downtrend for the AUD versus the USD. But at this moment of time, the reason why it's building that kind of uncertainty a little bit, and then whether it is weak or whether it is correcting, is mainly because of the weakness of the dollar. So the dollar's weakness, and also because it's before FOMC, so you're getting two weakening currencies. That's why it is actually doing what it's doing right now. Okay, so yes, exactly. And I hear that it may actually be even more than that, because the mining sector is going through a lot of cuts of people in the mining as well. So because they have extended that 28th of August in the commodity world, because they are the biggest suppliers of commodities, minerals to China, they cannot afford to actually close the mines for that production, because it will damage the entire country's earning. So then now they are actually discussing on having the mines side of it to actually work, and the ports as well, for transportation of all these minerals, especially to China. And because that is also impacting China's production. So you imagine the factory of the world, it is still China, and they cannot actually have their finished products in time to export to the other parts of the world. So that is why Asia is also suffering, mainly because it's importing of its power from China is actually getting lesser, and they cannot sell their products as well, to push out to the clients as well. So their sales are dropping tremendously in the whole of Asia as well, especially Thailand's economy, Vietnam's economy, various others. They are all interlinked with some buy finished product that they usually get from China. But then China, to make all these products, they need the minerals and the raw product to make this finished product from Australia, and Australia is going through this very bad time at this moment of time. So the good thing though is that this is also a double top side of it. So this would usually encourage a very big fall of the price once it breaks at the neck area. So this is the neck area, let's say, of this double top. Now, this double top is not made up of a very, like a single candle kind of thing, made up of so many candles with a lot of wick at the very top, which basically means that it's very, very strong, very strong. It has sort of made a border and made a very solid resistance at the very top here, made up of so many candles. And that is basically what encourages traders and myself to actually think that once it breaks out of this neckline, this purple line that I've drawn is like the neckline for this double top pattern. Then what it usually does is it comes down here, but it usually goes back up to this area again. So what has actually happened is it did break out from here and then went up, right? But now it came down again. So this is the test at this moment of time of it coming down and going back up again to this purple line. And once it starts falling, when you start seeing a bearish mother candle building up, then there shouldn't be any stopping of it. And then it should actually trigger or re-trigger the 73.40 area, which is the entry price, sell entry 1, and then we should see aggressiveness of just hitting your TPs, and that's basically it. So it's a waiting game at this moment of time, but it's got a lot to do with FOMC. The delay of all this has got to do with FOMC usually, and that is usually what happens, okay, in the market. But we know the direction, we are clear with the direction. It's just a matter of time for it to actually just happen, okay? So this is basically AUD USD. Now let's also take a look at AUD JPY, which is again a JPY pair, a JPY cross. JPY is getting stronger, Australia is getting weaker economically, and it's combined with a currency that is getting stronger. So that is a lot of reason for it to actually fall much more. So here it's already having a little bit of support right there. Yes, it is on the 4-hour chart that I'm looking at right now. But when you look at the 1-hour chart right there, let's say, what's going on is a lot of lower highs and lower low. It has been happening, but then you've got a little bit of a correction right here. But on the 1-hour chart itself, it's already showed you this very clear pin bar that shows you it's really difficult to go up, and hence the reason it made that turn down. But overall picture, if you compare 1 hour with 4 hour, it is showing you very clearly downtrend. All the candles are under all the 3 lines as well. You've got loads of lower highs, and then we want more lower lows right now. So at this moment of time, it's trading at the 80 psychological number anyway. So it's 80.87, the current price right now, 80.87, 80.88. So this is basically where I think we need to wait until the price as well goes lower than the 80 psychological number. So once it goes lower at the 80.70, that is my trigger price as well, at 80.70 to sell. And then you can look at more selling to go down, so that it's not really very worrying of any potential rise of price, change of trend. Is very difficult for Australian pairs to do that right now, and especially Australia versus the JPY. So you are safe to just sell basically the AUD JPY. Okay, so even with no stop loss as well, it is still safer because of the trend that you are in, because you are looking at fundamentals, technicals as well, especially for Australia. Australia fundamentals is looking really bad to the downside, and that is fueling more drop of the Australian dollar. So that is a good side of it to actually hang on to that fact. And then together with that, JPY is getting stronger with all the safe haven type flow. So that is making JPY really strong. So this is quite a safe selling type pair that is here. And we are in the selling zone anyway. 80.70, yes, it's always under the 80 psychological number, 10 pips under. So 80.70 is your selling price, correct? Yeah. Okay, so 80.70, if you're selling at 80.70, then your take profit, you can plan it at 80.30. Okay, so that is about 40 pips, potential pips right there. So you can do a pending order on that. So 80.70 you sell, 80.30 you take profit. Now your stop loss, because it is 40 pips, you want to double that, at least 80 pips, right? But because you want to also be safe, you just maybe stretch it out to about 100 to 120 pips as your stop loss. The bigger, the better, only because we are number one in the sell zone. We are also picking the pair or trading a pair that is very weak on the AUD and very strong on the JPY. And then we've got loads of technical reasons right here, and fundamental reasons are building up to make AUD lower and lower, or weaker and weaker, and JPY more. And in that way, yes, you can actually then stretch out your stop loss to be bigger. 120, 150, it doesn't really matter, mainly because it is quite a confident type clear trend for you to ride along a sell for AUD JPY. It's just that we cannot really predict the correction, because you know the correction side of it, the trend is really clear to the downside. But what if there is a correction? What if, let's say, something happens with JPY even, so JPY gets weaker, then it would actually encourage AUD to become strong. But maybe that could come up with a 100 pip candle, for example, but that is still not the trend. So we don't want that 100 pip spark or spike to actually destroy our plan to actually sell. And we don't want our stop loss to be hit, because we are clear with our vision for the sell side of it. So that is the only reason why I can advise traders to have a stretch out stop loss. If not, then we will get a stop loss that is reasonable, but then accept that you can close the trade and take your loss early, but not in this scenario. In this scenario, we don't want to take loss early, because the potential and the probability for selling AUD JPY is very high, and the potential for hitting our TPs are also quite high, mainly for many reasons, both fundamentals and technical. Then we can say we want a bigger and stretch out stop loss. You want to put your stop loss at 150 as well? Definitely, no problem. 200, no problem. Why? Because as we hit our TP, as we go down lower, you adjust your stop loss lower as well. Okay, so that can happen later on anyway. Okay, but do put your stop loss though, for any reason. Okay, all right, so that is for AUD JPY. Now, GBP JPY, same thing as well. It's got loads of potential again to the downside. The C point has moved up a little bit more for this pattern right here. So originally, when I drew this A to B, the Fibonacci itself, I think it was originally at about 61.8 or something like that, the C point. Now it looks like it's closer to 70.7 or even the 78.6 Fibonacci ratio. So what I would then do is just to wait till it comes lower. It's now at 152.40 already. It's a trigger price for a sell anyway for the GBP JPY. And again, this is the same scenario. JPY, you know, it is actually still stronger and compared to the GBP or the pound sterling. So now it is looks like it's got a new C point that it wants to make right here, and that is very close to the 50 EMA. So what I need to do is probably to adjust this ABCD pattern and to adjust it to make the C point higher, and then to redraw that ABCD pattern to the downside. But I'll wait for more fall first, mainly because as it falls, we have a support area to watch out for, which is just here. Okay, and that is really close to the 15200 psychological number. So what I would think would be best to do is that if you are selling right now, make sure you are exiting at 152.10. So at least you've got about 30 pips to make, and then you plan further later on to actually trade lower, and it will be more confident to trade lower as the price falls under 15200, lower like 15190 and below. Then you can re-enter for sell. That will be much more. So at this moment of time, it's just got a little bit of uncertainty, but then if you look at the dominance of candles and the trend itself, it is actually heading lower and lower. So there is a potential of a head and shoulder pattern right here, but it's not really that clear. You got shoulder number 1 here. Is it building shoulder number 2 here? If it does, then that correction will make it clearer to look like the second shoulder. If it is, then we have got a nice big picture to actually expect a bigger fall for the Gbp Jpy. Okay, so at this stage, I think most of the signals, I think all of the signals that's been released since Monday is very much in track or on track on the trend. So I'm not closing any trade signals that I have released early or anything like that, because it has already gone lower. It went up and scared a lot of traders. I understand that, but then now it's actually closer to the trigger price and it's heading lower, and it's actually more solid as well, the trend. So that is basically what I want to achieve as a trader, is to actually make my decisions correctly in terms of the trend first, because the trend needs to be your friend. And I have seen the trend and various other hints of the trend from a bigger chart or a bigger time frame perspective. So that is now following through quite well. Now for Euro JPY, I think it's one of those that hit its TP, if I'm not mistaken. It's 13010, I think we traded, and then we hit that there, which is a fall right here, if I'm not mistaken. And then we've got further fall as well. It hit that one right there as well, if I'm not mistaken, for the Euro JPY. So it's been good for this one, but this is on the 1 hour chart. It is still on the selling zone, which is a good thing. So I think our next trade is to look at prices right now actually going down under the 12980 psychological number, but I prefer for it to sort of go lower than 12940, so 12950. So once it goes at the 12950 psychological number, and then it goes lower than 12950, then I think I can look at it to actually mirror this mother candle right here and exit at 12930. So if I am trading right now at 12970 onwards, if I'm selling already right now, then I've got about 40 pips to make to target at 12930. So whatever you do, try to exit at 12930 instead, okay, for selling the euro versus the JPY. As you can see, it's looking quite aggressive at the moment. The good thing is that on the daily chart, it has already sort of marked its territory, you know, having the very high wick at the top, so it's not going to go up so much. On the weekly chart, it's already very clear that it wants to go down. And then monthly chart as well, very aggressive mother candle is going down. So yes, it is most likely having the potential and the power to actually go down for Euro JPY. If you go onto the indicator section, go to average directional movement index, look at the 4 hour chart, it is above the 25 level as well. Okay. All right, let's check. Selling price, it was actually earlier we had so many selling prices. I think it was 12990 much earlier, as of yesterday, before yesterday, if I'm not mistaken. And then right now, because of the price, you can start selling as of now because it went lower than 129. The price for sell was at 12970. It's already lower than 12970, so you can sell from now on. You can actually sell right now, and then your take profit is 12930, 129.30. Yeah, because we are looking at the support of the bearish mother candle here. That's your trading zone right there, black area, black sea area of trading from now until there. Yeah. Okay, I'll get rid of this one here. So from now you sell and then you exit at 1 to 930. Okay. All right, so that's for Euro JPY. GBP JPY selling price. When you want to know the selling price, because it's in the selling zone, it's not in the selling zone as yet. Yes, it is in one of the selling zone. You need to use the psychological numbers to sell. Okay, so right now 152, it has already you can sell from now because it is already lower than the 152.50 psychological number. Usually it's 152.40. It is at 152.39 now, so you can sell right now. Okay, GBP JPY. Yeah. So you are selling at 152 now, 40 for example, and then you are exiting at 152.10. So that's, I think, about 30 pips or so for GBP JPY. Okay, all right. Okay, so also you can cross-check on all these pairs because they are all in the signals area as well. But of course, we've got adjustment of price depending on what's moving right now. Euro JPY. Okay, so gold is at the moment still within the sell zone still, but then it is actually doing a little bit of uncertain moves at this moment of time, sort of like a sideways as well. But then what I would prefer for trading gold as well, of course, to the upside, but then it's not ready for the upside at this moment of time for gold. So what could most probably happen is for it to actually go sideways between the 1800 area or 1820 area to the 1790 area for it to actually go and do the zigzag. But if it does actually come down lower and it breaks out from 1792.68 area, breaks down lower, then the potential is really big for it to actually come down lower and hit this support at 1773. Now, if it does actually breaks out of this zone, this zone right here of the sell zone, which is at 11.62, then it might have some room for it to go up, but I don't see very big room. So I can see that the limit will be at 1826 area. But for now, I'm not doing anything for gold because it's very uncertain. I will wait until it triggers which price. If it triggers the one at the top here at 1815, I will buy. Okay, at 1815. But if it triggers this sell area at 1792, I will sell at 1791 and below. Okay, so it is now in the middle of these two lines. So I'm not doing anything for gold. I will wait until it trigger which price, and then I will write onto that. Okay, is that clear for everyone? Because the midweek webinar is best to go through all the release of signals and also to troubleshoot your current trades as well. Rather than pumping in more new trades, it's good to manage your current trades and wait for the current trades signals to actually hit its TP. It's probably the best way to manage your trade. Okay. If not, you'll get too many new trades. Usually midweek, I don't want to put too many new trades in there. So I will still put in some signals, especially for medium to long-term ones, so that our short-term intraday ones can get cleared and hit your TP. Then you can actually concentrate on these ones. Then by Friday, I can actually give newer ones as well, but intraday short-term ones. Okay. If you check the signal side of it, I just write it manually with the chart. Yes. Also, whenever we hit the TP, we will have the before and after chart, but it is just a screenshot at the moment. Have you checked it in the BKFX area? I mean, when you enter, you click onto the signal area, it should have a paragraph that I've written and then the chart at the very top. Yeah. Okay, so okay, I'll tell them to make sure that every chart should actually be there. Yeah. But check the paragraph as well, because then when you check the video, you will get a better picture as well, right? Because the video, this video, for example, this recording will be more updated than the screenshot as well. Yeah, but then you can always ask me directly as well. If there's no chart for that one, then I can send you the current chart. Yeah, it's better to work on the price that is most recent. Okay. All right, I think that's all I have the time for. And before I get into another webinar, GBP JPY AUD JPY. Okay, I will make that announcement. Let me tell that to Harris. All right, there you go. I have informed them, so they should make it available, all the charts. Okay. All right, there you go. GBP Jpy and AUD Jpy. I'll make sure that they have the charts for all the signals. Usually, yes. Usually it has a big impact. Usually it is what's moving the market, and moving gold, moving everything is the FOMC. Yeah. Because of the current issue with the bond yields going down as well. Okay. Yeah, it's going to cause a lot of havoc in the market, and it is happening at the moment. Yeah, because of the all the news that is going on, and it's actually quite high impact, especially when it's got to do with interest rates. Okay, all right. So trade carefully and be careful. Have your stop losses, of course. Stretch out your stop losses as well. If it is in a good selling zone and high probability selling zone. Okay, guys, thank you so much for your time, and look out for more signals in the BKFX members area, and then we'll discuss more. Send me screenshots directly as well, and we'll help you as best as we can. Take care, guys. Thank you. Have a great week and a great trading week. Take care. Bye-bye.